Hi, everybody. Good afternoon. My name is Inga Goddijn. I'm with Risk-Based Security, and I'm an insurance person. So I'm going to put that out there to begin with. So thank you, everybody, for joining me this afternoon to talk about the very exciting and very thrilling topic of cyber insurance. I'm sure everybody's been on the edge of their seat, looking forward to this in-depth conversation about insurance policies, right? Maybe? Thank you for laughing. I know insurance might not seem like the most fascinating topic in the world, but actually I think because of the breach at Target, because of all the press around the Heartbleed vulnerability, there does seem to be a lot more interest from leadership and board of directors these days around planning for and preparing for a data breach, and how are we going to respond to this if this happens. And that actually makes the topic of cyber insurance very timely, because it actually, spoiler alert, can be a very good tool to have in your quiver when it comes to actually responding to a data breach event or a data compromise event. And I hope by the end of the conversation I will have convinced you of that. But to get ourselves started, what we're going to talk about this afternoon, hopefully if I don't trip over the cord, we're going to talk a little bit about what is this cyber insurance anyway? What exactly can it do for us? What is it going to pay for if we do have a data compromise event? We're also going to spend a little bit of time talking about what these insurance policies don't cover. Because whereas it's just as important to know what they can do, I think with any conversation, it's just as important to know exactly what they cannot do. So we'll spend a little bit of time talking about what a cyber policy doesn't pay for, even though it might actually look like it in the brochure that it will. Then we're going to spend a little bit of time talking about how to find these policies, if it's something that you're interested in looking for, how you can go about buying one, and responding to some of the objections that you might hear, some of the rumors that you might hear floating around about cyber insurance and its relative value. So, with that, I have to confess, when I was preparing for this presentation, I took a step back and I thought, wow, is there really any industry out there that has a worse reputation than the insurance industry? And it got me curious, and I wanted to do a little bit of research, and I actually found a Harris poll that came out the first quarter of this year that ranked all the various industries by perception, by client perception. And I am happy to report that the insurance industry came in 4th from the bottom, so it wasn't actually at the very bottom, but there are a few industries out there that actually do have a worse reputation than insurance, believe it or not. Financial institutions, apparently they're still feeling a little bit of the burden and the fallout from what happened in 2008. We did beat out tobacco. I was proud of that moment. And we also beat out the governments. And if you're from a state like Illinois, like I'm from Illinois, where 4 of our last 7 governors are sitting in prison or sat in prison thanks to their conduct while in office, it was very encouraging to see that insurance actually came out a little bit better than those criminals in government. But it's true that the insurance industry really is an industry that people love to hate. And it's sort of understandable why. You know, there's just enough rumors out there about folks that will pay their premiums for years, they submit a claim, and it's denied. Or equally, they'll pay their policies over and over again with the same company, they'll renew them over and over again with the same company, they submit a small claim, and the next thing you know, they've been dropped. And while it's true that there are some bad actors out there, for sure, I think on the whole, for the most part, this reputation of being sort of maybe a not so trustworthy industry really isn't very well deserved. Because really, I think insurance has done, insurance on the whole, they've done a pretty good job, and they've actually done a pretty good job of developing policies to respond to emerging risks. And they are very interested in getting involved with data security and responding to data security. And I think they've done a pretty good job. So while I would have to say that maybe cyber insurance isn't the sexiest topic in the world, it certainly is a useful thing to have. And why is that? Why is that? Well, I think that's because we all can recognize that a data breach incident has a pretty high likelihood of happening these days. Folks like to say it's not a matter of if, it's a matter of when something is going to go wrong. And personally identifiable information or sensitive information is going to be compromised or leaked or even potentially compromised. And there's a lot of reasons why, and I think we all can accept that there probably is no such thing as perfect security out there. And we can invest a lot of time and a lot of resources into building up our defenses, and that's important, and that is something that we need to do. But all it takes is one person to write down their username and their password on a little sticky note, put it on the inside of their laptop, and then walk away from their laptop as they go through airport screening, or it's stolen out of their car, or something along those lines. So even the best security can probably be defeated by a very small, insignificant action. So is perfect security achievable? I would say probably not. And that leads to, I think, an interesting argument that I've heard that says, well, what this means is we just need to have more controls in place. We need to have more processes in place to help protect our data and our systems. And while I think in some situations that's definitely true, security can always use more resources, more support. I would never argue with that. But what I would argue is that there is a point where a new control or a new process, the value of implementing that starts to go down over time. You can layer up a new control, new process, however it goes, but at a certain point, there's not the return on that investment anymore. And in fact, if you have too many new controls, you start to get a negative return on that investment, right? Everybody's seen those situations where you've implemented something new and the next thing you know, somebody's found a new workaround because they don't want to deal with it. That happens. And so with any control, at some point, it starts to lose its value. And information security or data security risk is interesting in that I think it's not really an IT issue, to be honest. And I think sometimes we lose sight of that. But think about information, think about data and how it flows through an organization or where it resides within an organization. How many times have we gone into our doctor's office or our dentist's office and they have that giant wall of paper files back there? All of those files have sensitive, protected information on them. And what is IT supposed to do to control paper records that are sitting around someplace? Do they have to go through every file cabinet before it's sold to make sure that everything's been shredded? Are they going to take over responsibility for the shredders? I don't know. I don't think that's really reasonable, but hey, it could happen. I hope it doesn't, but it could. But that is one of the unique things about information risk or data risk, is that it's really more than just an IT issue. It's really about what we do with the data that we have, no matter where it is within the organization or how it resides within the organization. And that's important, I think. So, information risk, data risk, or data security risk. It is, I think, like any other risk that we have to deal with on a day in or day out basis. We have a few choices, right? Whether it's data risk or something else, we can either accept it, we can mitigate it, we can avoid it, or we can transfer it. And those are really our only 4 choices when it comes to risk. And they're all equally valid. They're just not all equally applicable. And if you think about it, accepting risk certainly makes sense, and it definitely makes sense if you have a high level of certainty around what the impact is of that event or if something goes totally wrong. But can we all say with a high degree of certainty what the impact on our organization is going to be if there is a data compromise? What will that mean to us? Can we absorb those costs? With some businesses, yes, maybe they can. With other businesses, a breach can actually put them out of business. The cost can be that significant. So simply accepting it isn't always really a good alternative. And likewise, you can't always avoid this data risk either, right? If you're walking across the street, there's a giant pothole there, you can probably walk around the pothole. But it's not exactly like Target could go out there and say, no, we're not going to accept credit cards, it's too risky. Cash or check only. That's not really an option, right? That would have put them out of business pretty quickly. So they couldn't really avoid that risk. And likewise, limitations, controls, they certainly are key and they certainly are important, and they have to be in place. But again, I would say controls have a diminishing return on that investment. And at a certain point, you can't control away all of the risk. So that leaves us with risk transfer. Insurance is just one method of risk transfer. There's a handful of others. Certainly you can outsource it. You don't want to have the risk of having an HR department. You just outsource all of that work. Using a third-party vendor or somebody else, you set up all these contracts, agreements, push the responsibility back off on somebody else. Those are all legitimate methods of risk transfer. But when it does come to dealing with the financial burden of a breach, there really is no substitute for insurance. It really can step up and bear a lot of the cost associated with that data compromise. So, what is this thing called cyber insurance? Now I have to say, the industry as a whole, the insurance industry as a whole, has kind of coalesced around this term cyber insurance, which when they came up with it 10 years ago probably sounded really cool, but now it sounds maybe a little bit cliche. So they've come up with some other names for it as well. They might call it network security, data breach insurance, data privacy insurance, network protection, data and privacy and network protection, all sorts of different combinations. But no matter how they label it, what they're really talking about at the end of the day is responding to the financial cost associated with a data compromise event. That really is at the very core of what a cyber insurance policy can do. Now, cyber insurance, it is a very specialized commercial policy. It's not like your homeowners or your auto policy. It works a little bit differently. It has some interesting caveats to it. So you can't necessarily equate it to the things that we deal with on a regular basis, day in and day out. But there are some ways that they are similar to an auto or a homeowner's policy. And how they are similar is they have elements that are both first party and third party. A little bit of insurance jargon, but good jargon to know. First party insurance is a coverage that pays to fix the things that we own when they're damaged or fall apart. Third party insurance is also called liability coverage, and that pays the other people, the third party, if there's some sort of harm or damage that our actions or our inactions might cause to that third party. And again, really at the crux of a cyber insurance policy is as it arises out of a security event, including a compromise of personally identifiable or sensitive information. So just to illustrate it a little bit more, third party, if the guy runs the red light, crashes into another car, crashes into the building, third party coverage is going to pay those other people that had their property damaged as a result of that action. First party, you know, the wind blows, the tree falls, it damages the car. That is first party when it pays the owner of that car to fix or repair the damage that's been done. And it is an important distinction to make, and it's an important thing to keep in mind, because most commercial insurance policies don't cover both pieces. They cover one or they cover the other. They very rarely combine the two. And that is one thing that is special about cyber insurance, in that it does combine the two. And that means that organizations that are looking for this, they can buy one policy that can cover both those security event recovery costs and provide protection from lawsuits, both with regard to funding defense of that lawsuit or providing for damage settlements. So that is actually something that's truly unique about cyber insurance. Another way that it's very much like a lot of other policies is that it's really predicated on some sort of triggering event, right? The car has to run the red light, hit somebody else's car. That was an accident. That accident triggered coverage. The wind blew, the tree fell, it damaged the car. That accident triggered coverage. Cyber insurance really is no different in that it looks to some sort of triggering event in order to start to kick in money. And the triggering event under these policies is incredibly broad. It generally will say something like any sort of failure of security that results in unauthorized access or use of the system or a compromise of data. Now that is pretty broad if you stop to think about it. Any sort of unauthorized access or use of the system, so even a privileged user who uses their privileges inappropriately, that can still be that triggering event under one of these policies. Generally, they don't get to be too specific in what that trigger might look like. They generally like to say some sort of security failure, some sort of unauthorized access. But they will also throw in some words in there that they like to see, like a denial of service attack, an infection, malware. Insurance people aren't overly creative. They usually don't go much further than that in their policy language. But they will include those terms because they know those terms and they understand those terms. But if you stop to think about that for a minute, that is a whole lot of activity that can happen that can trigger this insurance policy. It's not just running a red light. It's not just a fire. It's not just the wind, blowing the tree onto the car. It's really any sort of malicious activity that might take place on that system that can trigger coverage. It's another way that this insurance is exceptional in that it has a very, very broad trigger. So again, where does that provide the value? And again, is it first party or is it third party? And I would argue that a lot of the value of these policies is actually on the breach notification compliance piece. And this is the first party element. This reimburses the organization, or pays on behalf of the organization, sort of depending on the specific lingo of the form. They can respond to the cost associated with doing a forensic investigation. So if you need to bring in a firm to look at what data was compromised, how the data was compromised, insurance can pay for that. Likewise, legal fees. And if you do have a breach, it actually is very important to have attorneys involved very early. I know it might seem a little bit like maybe like a necessary evil if you have to, but attorneys bring privilege to that breach response process and to that investigation. And privilege is very valuable. It protects that process from being exposed to the public and protects it if there is a lawsuit. So privilege in responding to a breach from the attorneys can be very valuable as well. Also things like mailings or identity protection or PR costs, all those first-party costs associated with responding to the breach, these policies can cover. Likewise, on the liability side, these policies will respond to defense costs, and that is hiring all the attorneys to defend the organization should they be sued as a result of a data compromise or any sort of allegation of negligence. And companies are being accused of being negligent in how they handle their security increasingly. There are some legal protections out there for companies in the court system, but that doesn't prevent lawyers from trying. If they have the opportunity to bring a suit, they will bring the suit. Can also respond to the damages if you want to make that suit go away. These policies can pay for those settlements to the injured parties. Also a very nice feature. And absent a private right of action, these policies can actually respond to the cost of a regulatory investigation. So there really is a lot under both the first party and the third party. And when you start to add up the components or you start to look at how these things come together, you realize that first party component alone, set aside being sued, set aside any settlements, that first party component alone can be incredibly, incredibly valuable. Now, there are 47 states out there that have some sort of notification law. Has anybody ever had to work through a notification process? Anyone? Okay. And was it extraordinarily painful? Yes, absolutely. And it's extraordinarily painful because there's 47 different sets of rules about what you have to say and how you have to go about notifying. That is what makes notification such a burdensome obligation. Because we do have to comply with all those 47 DC, Puerto Rico, we have to comply with all those notice requirements. That's another way that the attorneys can be very helpful, is they can look at all those different requirements and figure out what needs to be said and what needs to come together. So that first party component that first party for the notification, I think a very important component. But you start to break down the cost just a little bit more. And this is something that we like to do on the insurance side. We always like to quantify cost. What we like to ensure is what we can quantify. So when you start to break down those response costs, it is more than just that notification compliance. You need to add in the forensics. And if it's a truly bad breach, it's probably going to require some forensic assistance to come in, figure out what data's been taken, probably figure out how it's been taken, and yes, these insurance policies can cover that as well. But you know, these things are never solved in an hour. They're never solved in a day. It can take weeks, sometimes even months of investigation to figure out what happened and what's been compromised. Attorney's fees. The forensic guys are expensive. The lawyers are even more expensive. And generally, it does require some sort of specialized expertise to help respond to these things. You can't go to the guy on the corner that set up, the will or does the accounts. You need an organization, you need a law firm that has some specialization in data privacy issues to help coordinate this response. And those guys are expensive. I know the slide says $350 an hour. I've seen it upwards of $1,500 an hour. And again, like the forensic investigation, these things are never solved in an hour. They go on and on and on. The actual physical mailing, the one piece that triggered this whole notification obligation, this, tell people that their data has been compromised, that's probably the cheapest piece of this whole equation. Notification generally only costs a few dollars a letter, just to print it out, stick it in the mail, get it off. And now some of the state laws allow for email notification, making this piece even less expensive. And I think that's just like an interesting little detail to this whole process, is that one obligation, that statutory obligation to notify, is actually the smallest cost component of the breach response. So I think that's an interesting little detail. Credit monitoring services. Now, I know a lot of folks have some different opinions about credit monitoring services, and I will be the first to admit I am not a huge fan of credit monitoring. I know it has some value, and it certainly has a role to play if Social Security numbers are compromised. But there is absolutely nothing credit monitoring can do for anybody if they have a credit card number stolen. That is my opinion. That is my personal opinion. But really, what is credit monitoring doing for you? It's telling you if somebody else is trying to open up an account in your name. Can a compromise of a credit card number, can somebody that has your credit card number open up an account in your name? No. But what happens when all this credit card information goes missing or is compromised? The first thing an organization wants to do, let's offer credit monitoring. Great. It's the wrong solution to the problem. And it's also an extraordinarily costly solution. Credit monitoring subscriptions, they start at $25 per person a year. And that's for some of the most basic credit monitoring. You start to add up things like 3 Bureau or multi-layer protection under the credit monitoring, and the cost can go up from there. Now, granted, if you have a truly large breach, you do get a little bit of an economy of scale when you go out and buy credit monitoring in bulk. But generally, you're looking at about $25 per person for a year. Then if it's a truly horrible event, and you need some public relations assistance to help with communication with the media or to impacted individuals, the PR guys will cost you $150 an hour plus. And of course, they're excited to have these events come to them because, hey, it's a nice engagement. So as you start to add up these first-party response costs and understand that insurance can respond to all of these costs, I think there's value just in that piece alone, But then there is that added layer of the third-party side, the liability side, and sort of the evil unknown in a way. It's the piece that keeps a lot of leaders up at night. They kind of understand what notification can entail, but what is it going to mean if we're sued because of this event? And it's concern. It certainly is a legitimate concern. And that is another piece of these insurance policies where there's another element of value. These policies will pay to defend the organization if they are sued. And these claims, even though some of them are very much groundless, or there might not necessarily be a significant way to recover from the organization that experienced the breach, again, that's no deterrent to the lawyers. If there's an opportunity to bring a suit, they will, in general, bring a suit. And these cases can drag on for years, 4 years. The average lifespan of a civil case in Cook County is 7 years. 7 years of legal fees add up really fast, even if there is no settlement at the end of the day. In fact, there was a study that came out not too long ago where the claims representatives were very excited that the totally false, groundless, baseless claims for a data breach event, they've gotten the average time of those being opened down to 18 months. So something totally frivolous still takes 18 months to resolve. In these policies, they can pay for that defense cost. Likewise, there is this thing called the right of private action, right? How many folks are familiar with the right of private action, or private right of action, I think is the other way to say it? A few, anyone? No? Okay, maybe. So there is this thing, right, where under certain statutes, under certain regulations, you and I do not have the right to sue. And HIPAA is the perfect example. If our medical information is compromised, we might be able to bring a lawsuit for other reasons, but we as individuals cannot bring a lawsuit for a violation of the HIPAA rules. Only Health and Human Services Office of Civil Rights can bring an enforcement action for a HIPAA violation. And that is another way that these policies can help an organization respond to an event. They can respond to those governmental regulatory investigations, right? So you can't be sued in court. Maybe the regulators come knocking on your door. They want to know, how are you protecting the systems? What sort of security did you have in place? How did you do all the checks and balances? Did you do what you were supposed to be doing? And those investigations can go on just as long as the lawsuits can go on. And these policies can pay to defend the organization through that government investigation. So another very valuable benefit. So, with all that said, that's sort of like the basic nuts and bolts of what a cyber insurance policy has in it and what it can do for you. But there is an added value that's out there. And it is something that I think is worth knowing about and worth asking about. Because if you're thinking about buying cyber insurance, this is sort of the extra bells and whistles that can bring a whole lot more value to the policy at not a whole lot more money. And that is the additional first-party add-on coverages. Now, like I said, most of these policies really focus around that loss of confidential information, a compromise of personally identifiable information. But again, like I also said, these policies have extremely broad triggers, right? Really any sort of security failure. So how these two things come together with these additional first-party coverages is these policies will say, well, we will pay for additional costs because of a security event that doesn't necessarily result in a compromise of personal information. So any sort of security failure, some of these policies can add an additional enhancement to it where they will pay for data recovery cost, system recovery cost. They will pay for business interruption and extra expense, which is actually the lost revenue an organization might suffer should they have a slowdown or some sort of compromise in the functionality of their system. A great enhancement for anybody that's dependent on an internet site that might be subject to a denial of service attack. Any sort of slowdown, that business interruption insurance can kick in. And these policies, They even can pay for an extortion demand, believe it or not. They have this extortion component built into it to provide coverage for the costs of negotiating through an extortion event, and in some situations will even pay the extortion demand itself, which is pretty extraordinary. And again, this is all predicated on just some sort of compromise of the security. It's not that the data has to go missing, something just has to go wrong in how that data is being protected for all of these costs to start kicking in. I don't know how many folks might have actually sat down and added up the cost to an organization if they do have this type of security event, but I'm probably guessing that this insurance would pay for itself with these coverages in just one situation. So, a lot of value there, absolutely a lot of value. But of course, like any other insurance policy, there are always going to be caveats of things that are not going to be covered. And it can be a little bit tricky in this space because sometimes the marketing will actually make it look like it's being covered when really it is not. And top on that list to talk about is reputation damage. And the reason why it's top on the list to talk about is when leaders are polled about, what is your biggest concern from a security event or a data compromise event? What keeps you up most at night? Their number one response is, what is it going to do to our reputation? Well, that's a good thing to be concerned about, absolutely. But can insurance actually pay to restore an organization's reputation? It can't. Soft costs, like the value of a trademark or the goodwill name of the organization, there's really nothing an insurance policy can do to help restore that or help offset that damage. Like I said, even though these policies can pay for business interruption and that lost revenue, they pay for it based on actual numbers of what was your revenue beforehand, what was your revenue after the event, will pay you for the difference. It doesn't pay for things like customer attrition or people refusing to shop with you again. So that reputation damage and some of the fallout that comes along with that damage to the reputation, the insurance policies aren't going to cover that. Likewise, a few of the other things that they're not going to cover, regular maintenance. Just like our car insurance, our auto insurance doesn't pay to maintain our cars. These policies aren't going to help maintain the system, and they're not going to pay for the cost of doing so. The cost of regular upgrades or fixes, so you need to put in a patch management process. Insurance isn't going to pay for that. And likewise, those upgrades, which actually can be a little bit of a point of contention, because insurance, the same principles apply here, where the goal is to restore the organization to the position that it was in before the event happened. But of course, anytime anybody has a breach, do they want to be in the same position they were in before the breach? No, you want to be a little bit better. You want to improve somewhat. But the insurance company doesn't want to pay to improve you. They only want to pay to fix you. So that cost of actual upgrade is something that they're not going to cover, and that can be a point of negotiation with the insurance company. Other things that the insurance won't pay for, the economic value of data. Now, business runs on information, right? And there's a lot of proprietary information that businesses have that's very important to them. Things like their intellectual property, their trade secrets, their customer lists. All of these things have a lot of intrinsic value to the business and a value that can be very difficult to quantify. So insurance companies, when they look at that, they're like, yeah, we're not going to cover that. Somebody wants to steal your trade secret, or if they want to steal your patents or your secret formulas, we're sorry that that's happened. We can help pay for some of the recovery costs, but we're not going to pay for the value of that particular information in and of itself. Another thing that some of these policies don't actually cover, and this is another important point to keep in mind when you're evaluating the coverage, is data or systems that might be in the care, custody, or control of others. And you think about how much gets outsourced these days, how many third parties are touching on that data, or how many different organizations might be helping manage that system. Some of these policies have these caveats in there that say, hey, you know, if this happens at some third party, we're not going to pay for it. Yes, you might still be responsible for it. You're the data owner, so you have to go through all the notification process, and we're not going to let you off the hook for that. But us, the insurance company, we weren't really paying to insure them. We don't want to cover that claim. And this can be one of those hidden caveats that can really get under people's skin, right? Because you're buying the insurance in order to provide this protection to the organization. And now suddenly you're going to come out and tell me, well, because it was some third party over here that was responsible, you're not going to pay for it? You know, what's that all about? So there are some caveats in there to be on the lookout for, and I think this is one of the big ones, is that data in the care, custody, or control of a third party. But despite some of these limitations, I think there is still a tremendous amount of value in an insurance policy, especially when you start to think about the fact that you can buy $1 million. And every time I say that, I always think of Mike Myers doing the $1 million. But anyway, that aside, you can actually buy $1 million worth of coverage for $1,500, or in some cases even less. I mean, some cases it might be a little bit more, but this is an incredibly inexpensive insurance policy to buy in some situations. And how phenomenal is that? You can get $1 million of coverage for a few $1,000s, and it's going to respond to quite a bit. So, you know, I think that is, so I think that's important, and I think that's a good point to keep in mind. Which I'm sure has everybody asking, how can we buy this insurance? Where can we find this? I want some now. Well, it is a specialty commercial insurance policy, that is for sure. And anytime there is a specialized commercial insurance, it means you need an intermediary to help out with finding the insurance on behalf of the organization. And there are a lot of excellent insurance brokers or insurance producers out there that can help go take the account to market, is generally what they call it. And they can help survey the market, figure out what is the right insurance policy for the organization, and help the organization choose the options that are going to best fit their needs. Like in some ways, again, some of these policies, they don't cover that third party thing. They might want, they'll steer you away from the third party, from those third party exclusions. Or if the organization has a lot of PCI requirements or PCI compliance requirements, they can steer you towards a policy that can pay for some of those PCI-related costs. So they can help you find the right insurance policy to fit with the organization. Now I have to confess again a little bit. I have been guilty of writing some really horrible insurance applications throughout my insurance career. And I will do a mea culpa right now because I know I've put together some questions that as you know, IT folks, if you're looking at it, thinking about it, you probably would have shaken your head or scratched your head and thought, what is this person trying to get at? This doesn't make any sense. This isn't even a yes or no question, and yet it's phrased as a yes or no question. So sometimes these insurance applications, they can be a little bit onerous or they can be a little bit difficult to fill out. But unfortunately, in order to get a quote, in order to have it come together, an insurance application is going to be required before you can even get a number on the table. The good news, though, is that this is a highly competitive space. Insurance companies are very eager to make their mark. They're very eager to learn more about information risk. So because of that competitive pressure, the length of the applications is coming down quite a bit. And in fact, last week, I was looking at a program where the application consisted of one question, one simple question. Have you ever had a problem? I don't know how you can say no to that, but it was just a single question. So in some ways, it's getting easier to find the insurance. And I will say, from the underwriter's point of view, If you do encounter some of those questions that are kind of shaking your head, you're not sure what to say, any additional information that you can provide to the insurance carrier, they're really going to appreciate that. It helps them a great deal to understand what's going on. So, what are some of the objections to this type of coverage? And I've heard this come up a few times before, that cyber insurance actually presents a moral hazard. And the first time I heard this, I didn't really quite understand what was being said. I'm like, a moral hazard? What do you mean a moral hazard? And it was explained, well, hey, if I can buy insurance for all this stuff, does that mean I don't have to care about security anymore, right? I've got $1 million of coverage. Why should I bother to do really anything? I'll dial it in, I'll phone it in. I don't have to worry anymore about how we maintain our systems. And I had a little light bulb go off in my head type of moment, and I thought, oh, I understand what you're saying. It's an excuse, or it's a reason not to take decent, reasonable security measures. But insurance companies have been dealing with moral hazard for a very, very, very long time, and they've come up with some really clever ways to work around moral hazard. And they have caveats in these insurance policies that say things like, if you fail to maintain your system to a reasonable standard, we're not going to cover you. Or if you have a claim that's contrary, that indicates that something was going on in your environment that was contrary to what you indicated on the application, we're not going to cover you for that either. So having this insurance in place really is no out for not maintaining the system, and that was a double negative in that sentence. But anyway, the insurance companies are used to this, and they will put in place controls for moral hazard. So it's not going to be an out for taking care of the system. One of the other interesting things that I've heard come up lately, and this is just very recently in conversation, is there's a lot of interest in government, both amongst the White House, some committees in Congress, and even the Department of Homeland Security. They've been talking about using cyber insurance as a way to set minimum security standards, almost using the insurance process as like a de facto regulator. And again, when I first heard this, I kind of scratched my head and I thought, what are you getting at? But then it dawned on me, really what the government's trying to say is, if organizations have to buy this insurance or they're going to move towards buying this insurance, that means that the insurance companies are going to look for a minimum security being in place. They're going to demand that security be at a certain level. And by doing so, that's going to force everybody to rise up. It's going to force everybody to be better. And it'll become like a de facto security standard that we can all look to. And isn't that a great solution? Because it's a private market solution. And I can appreciate that, and I can understand that point of view. But there's a couple of reasons why I don't think that's necessarily very realistic right now. And certainly top on that list is insurance is incredibly competitive. It is cutthroat. You might not think that from just looking at it from the commercials. Flo seems a very nice person. But actually insurance is incredibly cutthroat. It's incredibly competitive. And as I said, these markets, they're looking to maintain, or they're looking to build their market share. So, are they going to impose a standard? Probably not. They might raise a price here and there. They might selectively decline a company here and there. But at the end of the day, they want your business. They want to write that policy. So they have very fluid standards in what they look for in security. And I would also say, thinking about the government interest in using insurance as a vehicle for improving security, I think what probably sparked that conversation is the National Insurance Highway Safety Institute. If you're familiar with the organization, they're the folks that brought us the crash test dummies. They do a lot of car safety analysis, and they've really done a tremendous job with making our vehicles better. You know, they got seatbelts in there, they got airbags in there. They're big proponents of anti-lock brakes very early on. And they've done a lot of very good work with improving the safety of cars. But while that is phenomenal, mandatory insurance might have helped reduce the cost of property damage as it relates to those cars, but it's done absolutely nothing to make any of us better drivers, has it, right? You know, it helps the product, but it doesn't necessarily help the process. So cyber insurance becoming a de facto standard-setting organization probably isn't going to happen, or certainly isn't going to happen in the near term. So with that, I would say, I hope you'd all agree, that cyber insurance can be an incredible benefit to the organization. It can be very cost effective. Again, few $1,000s for $1 million coverage. That's got to be one of the cheapest protections you can put in place. It is readily available. It is a little bit of a process, but it is readily available out there. And right now, I think it would have a very minimal impact on the day-to-day operations. So really, at the end of the day, what more could we ask for, right? That's a pretty good deal, all in all. And with that, I would say, does anybody have an insurance question?